Candlestick charts, how an 18th century Japanese rice farmer shaped how we analyze stocks. My name is Michael McKay. This is Munehisa Homma, which in Japanese is pronounced Munehisa Homma. Go figure. He was born in Sakata, Japan in 1724 during what is now known as the Edo period. During the Edo period, which ran from 1603 to 1868, the production of rice in Japan nearly tripled, and suddenly large-scale rice markets developed along with other economic concepts like credit and currency. Now, Munehisa knew a good thing when he saw it, and he decided to become a rice farmer. He was looking forward to making lots and lots of money in his new venture. By the way, Banzai means 1,000 years when it's literally translated, which doesn't make a whole lot of sense if we translate it literally into English, which is why we translate it to mean woohoo! So Munehisa bought a rice farm. And his rice farm may have looked a lot like this one, minus the telephone pole in the distance, which obviously had not been invented in the 1700s. So, in fact, let's just pretend we never saw that. Once Munehisa's crop was harvested, his next task was to get it to market. When he got to the market, he realized that it was far more complex than he could have imagined. Some rice farmers were able to sell their rice at auction for a high price, while other farmers received much lower prices. Some days prices would trend higher, other days prices would trend lower. There seemed to be no rhyme or reason to how these different prices came about, and it was an eye-opener for Munehisa. In fact, it was a little overwhelming. He decided to return home and figure out a way to make sense of it all. Here was the problem. Munehisa needed a way to graphically report prices on the fly in a way that allowed him to compare prices and time periods that wasn't just a long list of prices and dates. And this is what he came up with: the candlestick. Here's how it worked. It consisted of a wide body and skinny extensions, which are called wicks or shadows. If prices were trending down, it would be red. So for example, on a Monday, the market would possibly open at this price, rise just a little bit to this price here, then drop again all the way down to this point, and then close here. The fact that the body of the candle is red tells you that the price moved primarily downward, and the close that day was lower than the open. The following day, the market might open where it previously closed and rise throughout the day, making a green candlestick. It might have opened right here, dropped down to this level here, then gone all the way up to this point, and then finally closed here. The fact that it is a green candle tells you that it's a positive day, meaning it closed higher than it opened. Now, the beauty of this system is the fact that you really didn't have to do any writing at all, which is important in feudal Japan. You can actually track the behavior of a price every day, every hour, even every minute of the day without ever having to write down any numbers whatsoever. Soon, Munehisa started to notice that you could put all of these things together and track not just days, hours, and minutes, but weeks, months, even years. He also noticed that by studying these candlesticks, you could see recurring patterns begin to emerge. For example, he noticed that in an uptrend, you could often see a long green candle followed by a gap, after which a small candlestick appeared called a doji, and that's your doji right there. When the doji was followed by another gap and a long red candlestick, it usually meant that the price was reversing and would start trending downward. The doji is the key to this pattern, and the pattern is a reversal. This particular pattern is called an abandoned baby reversal. And in this case, the doji in the circle you see there is the abandoned baby. Apparently it's an abandoned baby boy. Soon many other patterns emerged, many of which are still used now, more than 200 years later, including that abandoned baby that we just discussed. And it's one of dozens, perhaps even hundreds of different candlestick patterns that are still in use just about everywhere. It continues to be an extremely useful way of recording pricing behavior without having to write down a lot of numbers. And it's also a great way to predict what a price is doing and what it may do in the future. So the next time you see a candlestick chart like this one, remember that we owe it all to rice and to this guy. Thanks for watching.